Hi, my name is Michael Chadwick, and I'm here to talk about hard money lending. Specifically, I'm going to answer what is a hard money lender. And it's pretty simple, actually. I mean, a hard money lender is a lender that's looking to finance real estate. They're going to take a first or second mortgage on an investment piece of real estate. Hard money lenders can't lend to owner occupants because hard money lenders aren't regulated like banks are. Banks are lending deposits. Therefore, they have regulations, and therefore, when they make loans, they have to abide by certain, restrictions. Maybe they have to deal with debt-to-income ratios, and just a ton of borrower-related financial condition items that hard money lenders don't need to deal with. I mean, hard money lenders, because we're unregulated, we can make decisions fast. We can make a borrower provide as little or as much information as we need them to, and we'll talk about that in a second. But in the end, a hard money lender is a lender that makes loans on investment real estate. Let's call it their loan is secured by a first or a second mortgage, on real estate, like we talked about. And hard money lenders come in all different shapes and sizes. So I like to describe the hard money lending world as a spectrum that starts on one side is where you have a national hard money lender. It's really something new over the last 10 years. I feel like hard money lenders up until the financial crisis, we're really just local private money lenders, let's call them, folks that were lending their own money or lending a group of investor money. The investors want a certain return on their investment, so the person making the loans would charge rates, and I've seen rates 12, 13, 14, 15%, 2 to 5 points. And that's really because investors were looking at making a return on their investment commensurate with the risk. And at the end of the day, that's why hard money lenders charge higher rates. But so you have the spectrum. You have the national hard money lenders on one side. You have the mom and pop, local, yokel hard money lenders. National hard money lenders may require an appraisal, a credit report. Some require tax returns. Some want to proof of liquidity. And then on the other side, you may have a local hard money lender that doesn't need an appraisal, doesn't care about your credit, will drive to the property, pop their trunk, write a commitment, and close in 3 days. Our lending shop is somewhere right in the middle. We're going to require, credit and proof of liquidity, but we're primarily going to be looking to the experience of the borrower. More experience a borrower has investing in real estate, the less risk. Therefore, we provide a lower rate and higher leverage. Where I would want to say about as fast as your local, let's call it private money guy. We can close a loan in 3 days. It's not common. We're usually about 2 weeks. A national lender might take a month. And generally they tend to be a little bit clunky. So I tend to believe that the best hard money lenders out there are ones that are really in the middle of the spectrum. They have a local presence, meaning they have local attorneys, local inspectors, local appraisers, all servicing their loans to make sure that we get through the process of making a loan as efficiently as possible. So in the end, though, the key being that most hard money lenders are focused on the collateral value more than anything else, especially when compared to how banks look at a borrower and their financial condition. It's just not the way of a hard money lender. You're going to see bank rates at 3-4%, and you're going to see hard money rates between 8 and 12% these days. And that's really just a function of where their money comes from. Private investors, higher returns. Banks can lend deposits. Deposits aren't paying a huge interest amount right now, so they're cheaper money, so they can lend to the consumer cheaper. I think that's it. I mean, I think one of the things that I'm going to leave you with is, and it's really a pro tip, is that you make sure that you're going to a direct hard money lender, because to me that makes a huge difference. In the pandemic, we saw a lot of lenders fold. They didn't have any money to lend. They were originating their loans and then selling their loans to a third-party buyer. and certainly we have the ability to do that too, but we also have a balance sheet that we can lend from. And that's why, as a company, we grew during the pandemic when a lot of lenders were just not lending. They weren't able to fund construction draws. So at the end of the day, do your research, know how your lender is being funded, know what types of loans your lender makes. Make sure that the lender that you're going to they're not making their first loan ever on a fix and flip, if that's what you're doing, or their first loan ever on a ground up construction deal. Make sure you know exactly who you're dealing with. As always, listen, like and subscribe. If you want to see more hard money lending content from me, I'm putting up videos all the time now, or at least pretty regularly. So, and if you want to visit my website, it's www.hardmoneylenderdirect.com. Thanks for watching.